forum was how to take into consideration the requirement of the FATF regarding the identification of ultimate beneficial owner in the trade processes. And during 3 days, we did have several stakeholders who have discussed the angle of taking that requirement and implementing it in our regulation, implementing it in our processes, in banking processes, but how also corporate has to adapt to those requirements in order to ultimately allow an identification of who is behind our corporates, okay? Corporates requiring financing, and which would allow our financial institution to better know the customer and to better also position themselves to finance them. But we also discuss how technology can be leveraged to monitor the risk related to money laundering, terrorist financing, and how our bank must position themselves to better equip their platform with the latest technology so that you have a trade platform which is secured, where the compliance risks are mitigated.
Senegal played host to the 8th Afreximbank Compliance Forum in Dakar, where key stakeholders in the compliance ecosystem got to exchange on the theme, the implications of the Financial Action Task Force requirements regarding the identification of the ultimate beneficiary owner and its impact on trade facilitation. The UBO requirements from the Financial Action Task Force were designed to prevent money laundering and illicit activities. I'm Kenneth Igbomo, and on today's episode of Focus On, our spotlight shift to this forum where we explore the wider implications of this year's theme and the far-reaching consequences for trade facilitation, terrorism financing, and other threats to the integrity of the global financial system. The stage was set with some opening remarks as Royal Bank's head of specialized finance, Jean-Eric Montunga, raises some germane questions that should drive the deliberations at the forum.
As we discuss a critical topic for the future of our continent. As Africa advances under the African Continental Free Trade Area, the promise of economic integration is closer than ever. However, for this integration to be truly effective, transparency in our trade practices is essential. UBO identification is key to this transparency, ensuring that we know exactly who really controls the businesses that are the lifeblood of our economies. Intra-Africa trade is just not about moving goods across borders, but it's about building trust, fostering partnership across our diverse markets, and by accurately identifying UBOs, we protect our financial systems from illicit activities, we strengthen our business environment, and we enhance Africa's reputation across the globe stage. Now, for a bank like ours, Royal Bank, who operates in the Democratic Republic of Congo, which is currently on the FATF grey list, this issue is even more pressing as we're working diligently to meet international standards and emerge from the grey list. An effective UBO identification is crucial and critical part of this effort. By improving transparency, we can foster greater trust with our trading partners and continue to broaden the goal of a stable and integrated African market. Now, these 3 days of discussions will be crucial. How can we streamline UBO identification? How can we ensure that our efforts promote rather than hinder the growth of intra-African trade? Ladies and gentlemen, these are the questions we must answer together. And with some of the brightest minds on the continent in our midst, I have no doubt that we will answer these questions. Now, allow me to thank Afreximbank, its president, Dr. Orama, Mr. Jean-Assem Yerima, the Djaba, for bringing us together in this beautiful city of Dakar. We would like to thank as well the Republic of Senegal, who has allowed us to use this city and get out of our, let's say, chaotic daily jobs to come and apply our minds to some of the critical issues affecting the continent.
As the event unfolds, some pertinent areas of focus around the UBA requirements will be how these requirements impact businesses and what added value they could provide, their possible impact on the AFCFTA, the effective and efficient implementation of the standards, and what role sanctions risk will play in all of this. Let's get some context on this point.
And in February 22, Russia invaded Ukraine, sending a shockwave through the global economy. And as a response to that, the US, the UK, and the EU have enacted multilateral sanctions, quite robust sanctions, and we've seen the novel Russian oil price cap. And interestingly enough, with the Russian oil price cap, there's something called safe harbor, which leads me to my next thing, and that is strict liability. And this is what I call a threshold issue and a foundational principle of the US, the UK, and the EU sanctions regime. And that enforcement posture means that it does not matter if you had knowledge, it does not matter if you had intent. All that matters is that the illegal or illicit conduct occurred to have an apparent violation. And that standard of enforcement is harsh, but it's there. And it's there because the regulators want to get the industry to comply, if you will. And from that, we've seen a lot of different types of executive orders. And recently, we saw Executive Order 14114. And for this audience, it's really relevant because that executive order targets foreign financial institutions doing business with Russia's military-industrial complex. And as part of that executive order, it has expanded OFAC's authority to impose secondary sanctions on foreign financial institutions. And to be clear, with secondary sanctions, which is very different from primary sanctions, is transactions for secondary sanctions do not require a US nexus, which means you could have a transaction outside of the US dollar, outside of the US jurisdiction with no US person involvement, but OFAC can still exert jurisdiction and impose secondary sanctions. It is broad authority, and the reason that that is there is as another tool in their tool belt to, again, encourage compliance across the board. So understanding that Russia was a huge foreign policy priority of the US and coalition partners, you can't talk about sanctions evolution and sanctions risk without talking about the dark fleet. And when I say the dark fleet, I'm talking about boats, vessels that move crude oil around the world. And what we started to see is that 640 vessels are now part of the dark fleet, which is 13% of the international trading fleet. It's a staggering number. And from a dark fleet perspective, what is it? It's tankers. These are aged 15 years or older. They have beneficial ownership that's complex, designed to obfuscate UBO. They're engaged in deceptive shipping practices outlined in the May 2020 advisory, AIS manipulation, ship-to-ship transfers, falsifying cargo documentation. And they're all engaged in lifting Russian, Iranian, and Venezuelan oil. To be clear here, we're not saying that they're violating sanctions. That's certainly the inference because they're engaged in deceptive shipping practices, but it's not to say that they are actually violating sanctions. But the problem is real. So the risk we're seeing in the maritime space has been amplified since Russia's invasion of Ukraine. And thinking about ultimate beneficial ownership, thinking about complex ownership structures, what we're starting to see in the maritime space is owners, single ship companies, special purpose vehicles people that are owning, operating, managing vessels, individuals that have no nexus to the shipping industry, maybe in China, not many shareholders. So the point of this is that bad actors have gotten more sophisticated as time has gone on. And us as financial crime professionals have to have the ability to identify these types of risks and to be able to mitigate, remediate, evaluate. And to do so, the regulators have been quite clear that is the expectation today. So I see the problem exacerbating and getting worse as time goes on because sanctions are so tied to geopolitics. And with that being said, there's not a clear end in sight to what's going on in the world today.
It's good to get the context sorted. So how will the implementation of the FATF requirements play out from an operational standpoint? And what does the day-to-day impact, especially in the financial services space, look like?
The impact will be related in three segments or into elements, looking at the institution, the legal entity itself, and we'll look at the country level, and then we'll look at the financial institutions level as well. The impact of transparency and ultimate beneficial owner is on the legal entity by the way of putting obligation on the legal entities to disclose the ultimate beneficial owners. Usually the ultimate beneficial owners sometimes are not part of the directors, part of the shareholders, which are actually documented in the registration document. Because if the organized crime gangs want to use a legal entity or a legal person to circumvent the process of circumvent controls and launder money, they would not disclose in the registration document. So now the changes has put a critical and crucial obligation on them to disclose. So that is one. Then we come back to the national level. The changes has put an obligation on the national level to maintain a register for which it will be mandatory for all entities to register and to the extent of disclosing fully both the ultimate beneficial owner and management controllers. So if you are taking for Ghana per example, the register of company has now enhanced its registration processes and then has made it mandatory for all companies being registered to disclose and document it as part of the registration process, and even gone beyond just onboarding registration to updating your records frequently. So anytime there's a change, you need to do that. Then it moved to the regulator. The regulator will have to now develop regulations and guidelines to make it mandatory for financial institutions to demand the ultimate beneficial owners of those legal persons when they want to do business with. So we realized that in Ghana, new guidelines have been passed by the regulator, which enforces that. And I think that in West Africa and even global, in the globe, every country is mandated to do so. Then we come to the Financial Intelligence Center, the financial institutions. The obligation of these changes is for us to enhance our KYC, customer due diligence, and enhanced due diligence to ensure that those informations are obtained and tracked to know the ultimate beneficial owner, even if it's not part of the registration. So due diligence processes have been enhanced. And it also facilitate trade and business activities because you are able to know who is behind a certain company that you are dealing with. And if you are going for maybe credit, you are able to, on the search engine, identify who are the real owners of the company and the character that they present so that you are able to have a business with it. So that is what we do now.
So the biggest takeaway here is around UBOs and access to that information. So ultimate beneficial ownership is core to any anti-money laundering program. It's also a key focus of the FATF. One of the challenges we have in Africa is access to this information. But we are seeing slowly governments and regulators drafting new legislation, drafting new regulations to make access to this information easier. And then as a technology provider like LexisNexis Risk Solutions, we can then take that data combined with technology to give the financial institutions access to that to remain compliant.
You're absolutely right. Ultimate beneficial ownership, the UBO, verification is crucial in fight against money laundering and terrorist financing. The FATF places particular emphasis on this practice to ensure transparency and compliance of companies with international regulation. Companies must identify and verify all natural persons who hold directly or indirectly more than 25% of the capital or voting right of the company, or must exercise control over it. This helps preventing illicit activities by making it more difficult to conceal the true beneficiary or essential transactions. Let's not forget that penalty for non-compliance with ultimate beneficiary, that's your UBO verification obligation, can be very severe and vary for jurisdictions. Some example in the financial fines, company can be fined substantially. These fines can reach millions of euros. Criminal penalties also in some cases, company executive may face criminal persecution, which can result in jail time. Non-compliant company may be prohibited from carrying out certain commercial activities of participating in government procurement. Reputational damage for non-compliance can also be a very key point that the company reputations can be also engaged, which can have long-term consequences on its business, relationship, and ability to attract investors.
But what are the implications for trade?
First, two of the most greatest enablers to crime and criminality is surprise and secrecy. So this revision to Recommendation 24 has taken away secrecy. Now we need to break the veil and know who is the beneficial owner. In Nigeria, in 2019, NEITI, the Nigerian Extractive Industry Transparency Initiative, came up with a regulation on beneficial ownership for the extractive industries. That was long before FATF's amendment to Recommendation 24. And in 2020, we also amended our Company and Allied Matters Act to include an obligation for beneficial ownership and the register. In 2022, we also came out with the Persons of Significant Control regulation that limits disclosure of beneficial ownership to all that have up to 5% control or voting right in an entity. Now, what this has done is that it has exposed the industry, both the entities, the reporting entities, and the financial institutions to enhance customer due diligence. And those enhanced KYC and CDD has cost implications. So it's, even though it strengthens the financial system, which in the long run will bring more business because it deals with the issue of trust. And if criminals are no longer having access to the financial system, the economy will boost and the commercial businesses will thrive. So first, it has removed one of the enablers to crime, that is secrecy. Secondly, it has also boosted confidence in the financial system because you know who you are dealing with and you are no longer faceless. And it has reduced the opportunity of criminals hiding behind opaque companies to move illicit funds. So these are some of the benefits, direct benefits of the amendment to Recommendation 24.
But beyond the penalties and reputational damage from sanctions, what are some implications of these disruptions and increased risk exposure?
When we talk of sanctions, we are talking of non-adherence to rules, which brings us to non-compliance. There is a correlation between geopolitical sanctions and AML-CFT sanctions, especially when you look at the PF CPF aspect, the proliferation financing. So, as has been said here today by my colleagues, sanction risk today has well gone beyond financial and reputational damage. It now encompasses more substantial disruptions to core financial transactions of banks. For our own side, the jurisdiction where I come from, yes, we have monetary sanctions, but with due respect to the bankers here, I think the easiest of the sanctions is monetary sanctions. They will just pay the money and go. However, we discovered that, the FATF has said that sanction must be dissuasive, proportionate, and effective. And for it to be able to be effective, it must dissuade.
OFAC worked directly with us in crafting solutions to lift the DPA. And things were board oversight, appointing an OFAC officer that is directly responsible for all engagements with the regulator, to build sufficient infrastructure for your payment screening and have sufficient resources. So the regulators, through that process, guided us to be able to get out from under the DPA. We also worked with an independent monitor that was prescribed as well. So we had resource from the regulator as well as prescribed actions that we had to take to get out of the DPA. So there is that engagement with the regulators in the US, and as far as sanctions and things like that, the monetary fine is there, but the regulators really want a culture of compliance. So after enforcement, they do work with the industry to move past that.
Panelists also explored the related compliance risks in identifying the ultimate beneficial owner. So how are banks mitigating this impact?
What we need to do is training and awareness of identification of UBOs, because if our front lines are not aware of how to identify the UBOs, then they would onboard those customers that are potentially money laundering, terrorist financing transactions will come through the account. So you train them, and by training them, we usually you can do online e-learning, but I suggest another form of training, what we call role-based or functional-based training. So you bescope the training, or you bescope the training tailored to the role the person perform. So relations manager will have a specific training in identifying UBO, because they go to the field. So they will be able to have engagement, how to engage the customer to be able to unearth those uncovered UBOs.
So what role can artificial intelligence play to improve the compliance ecosystem?
I think specifically with UBO, again, for me, it's the complexity of the data and the amount of data you need to obtain. But I can imagine also the pace of change in that huge amount of data. We are now able to process huge amounts of data much quicker with the algorithms that process the data. We're able to gather more insights in terms of machine learning to be able to take the data and turn it into information. I think the key lever for AI is to take that a step further and create enough capacity to learn from the previous decisions, not just to make a decision, but to keep learning and storing the information to make better decisions as you go forward, contributing to a reduction in false positives. For me, I think that's where the last line, or the line that we're all trying to get to, is to move just from learning to use that learning into insights that drives better decisions.
First of all, it's a technology that exists, okay, and which is mature enough now, that could be used, let's say, by anyone, okay. So that's something which is it's something which is affordable for the bank, not only for the bank but for everyone. So that's very important. It's a technology which is easy to access because it's based, let's say, on cloud computing, internet access, and let's say a usage of large data. And those large data exist and are available. I think that the benefits are also tangible, okay? Every time there is a new technology, there is a lot of buzz and a lot of traction. But after a few years now of experience with many banks, we can see tangible benefit for the bank. So that's one of the reasons it's so important. it's available. There are key benefits. And also, there is another point which is important. We've all been, let's say, astonished by, let's say, the launch of ChatGPT, like, for instance, which is the new generation of AI and technology. So it's just the starting point of a journey. So we know that will, let's say, transform, let's say, our industry, our financial industry. So that's the key reason why AI is so important for our industry, and especially on the compliance part of the industry.
So one of the best examples we've seen is being able to do the entity extraction. The large language models are much better doing this than any other software available, than any other library. So with an out-of-the-box solution, we were able to, with a very dirty data set, to do that entity extraction. And that then enables to do the next step, right? The next step can be passing that information to a human, passing that information to another system, but this was a huge improvement. Another one was also applying basically in real time the reasoning layer that humans before used to do. So now we are able to do this, collecting a huge amount of information from the public domain and apply a reasoning layer to then extract the main components, the main risk components, and again, pass that to the next layer. That can be another AI, that can be a human, or that can be just storing that system.
And this brings us to the end of our coverage of the 8th Afreximbank Compliance Forum. Views have been exchanged, experiences shared, but a lot of work still needs to be done to increase Africa's share of international trade. And as the Africa Export-Import Bank believes, better compliance will lead to better trade. I'm Kenneth Momo. Thanks for watching.